Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Happy Tuesday, everybody. Today's video will contain a sponsored feature. Sponsored features are restricted to 1 to 2 per month. This is to ensure that the channel is financially sustainable while still primarily supported by subscribers. The sponsored feature will be labeled throughout, and you can skip it in the chapter feature below. If you'd like to know how I work with sponsors and how I choose them, please see these details in the description below. Let's begin. Yesterday, DPP leader William Lai succeeded his former boss Tsai Ing-wen as president of Taiwan, officially the Republic of China. In his first speech as leader, Lai omitted any reference to the 1992 consensus between Beijing and Taipei, saying the two sides of the Taiwan Strait, quote, are not subordinate to each other. End quote. In his speech, Lai signalled stability and policies towards the mainland, but he made no secret of the very tense and dangerous times his people find themselves in. Lai appealed to Beijing to engage with Taiwan's democratically elected government, calling for the resumption of mutual tourism exchanges and programs bringing mainland Chinese students to Taiwan. Beijing has blamed Taiwan for an almost complete breakdown in cross-strait interactions in recent years, though Taipei insists that Beijing has been the problem behind this. Lai pledged that his government would, quote, neither yield nor provoke and maintain the status quo, end quote, across the Taiwan Strait and, quote, uphold the 4 commitments, end quote, made by Tsai Ing-wen, including sticking to Taiwan's free and democratic constitutional system. It is worth unpacking some of Lai's speech at length. Quote, Taiwan is strategically positioned in the first island chain, and what affects us here affects global geopolitical development. Even as early as 1921, Jiang Weishui said that Taiwan is a frontline guardian of world peace. Now, in 2024, Taiwan's role is even more significant. I want to call on China to cease their political and military intimidation against Taiwan, share with Taiwan the global responsibility of maintaining peace and stability in the Taiwan Strait, as well as the greater region, and ensure the world is free from the fear of war. I hope that China will face the reality of the Republic of China's existence, respect the choices of the people of Taiwan, and, in good faith, choose dialogue over confrontation. We have a nation insofar as we have sovereignty. So long as we identify with Taiwan, Taiwan belongs to us all the peoples of Taiwan, regardless of ethnicity, irrespective of when we arrived. Some call this land the Republic of China, some call it the Republic of China Taiwan, and some Taiwan. But whichever of these names we ourselves or our international friends choose to call our nation, we will resonate and shine all the same. End quote. Both Beijing and Washington were watching the speech very closely. Liao Yushi, assistant professor at Taipei-based Tamkang University's Diplomacy and International Relations Department, expressed on the speech, quote, as Lai clearly presented a stable approach and he avoided sensitive terms and topics across the strait, I think the US should be satisfied or relieved. End quote. As for Beijing, long before Lai took office, Beijing made plain that it dislikes him even more than it did Tsai Ing-wen, his predecessor. Chinese officials often cite a remark he made in 2017, in which he called himself a pragmatic worker for Taiwanese independence. Lai supporters say that he meant Taiwan should exercise self-rule without seeking formal independence. Quote, as expected, President Lai signaled stability and policies toward the mainland, but the PRC government does not trust him and never will. There had been speculation that the PRC might take significant steps after the election and before his inauguration to express its displeasure with Lai, but that has not really happened. On Friday, there was a brawl in the Legislative Yuan, and given the DPP's minority position in Parliament, Lai may have a very hard time pursuing his agenda. So it may make sense, I hope, for Beijing to be restrained and try to leverage the gridlock in the legislature, rather than take substantive actions in the near term directed at the Taiwan economy. End quote. We also saw the usual rhetoric from state media and officials. A PRC Foreign Ministry spokesperson expressed yesterday, quote, Taiwan is not a country. It has been an inalienable part of China's territory since ancient times. The international community has long reached the conclusion on this. It is a vital component of the post-World War II international order. China will and must achieve reunification. No one or force can hold it back. Our message to some in the US, The trend of the world is surging forward. Those who follow the trend will prosper. Those who go against it will perish. Those who challenge the One China principle will be swept away by the trend of the times. Those who turn back the wheel of history will be run over by it." End quote. An especially sharp state-run Xinhua commentary said that Lai seeks, quote, "to bolster his position by allying with anti-China Western forces under the guise of democracy, acting as a pawn and pleading for foreign backing. His so-called democracy is merely a cover for inciting anti-China sentiments and pushing for independence provocations. His subservience to foreign interests is essentially a betrayal, risking Taiwan's well-being for his political agenda." End quote. Meanwhile, on Monday, China's Ministry of Commerce announced the inclusion of some companies on its unreliable entities list as they sold arms to Taiwan. The companies include General Atomics, General Dynamics, and Boeing Defense. They will be barred from engaging in China-related import or export activities and are forbidden to make new investments in China, according to the announcement. Senior executives of the companies are also prohibited from entering China. Okay, that is part 1. Next up, for part 2 of today's video, we will look at the Chinese economy. But first, we move into the sponsored content. In this fragmenting global order, investors, companies, and nations alike are turning back to age-old commodities. In this environment, it's no surprise that gold has seen an explosion of popularity. Indeed, China's central bank, the People's Bank of China, topped up its gold reserves for the 18th straight month in April, buying up 60,000 troy ounces. First quarter purchases by the world's central banks, led by China, were the strongest on record, according to the World Gold Council. Goldman Sachs analysts wrote in a note earlier this month, quote, "Emerging market central banks drive the gold rush," end quote. And as we have seen, households concerned about instability are also buying up the precious metal. US-based Bloomberg writes last week, quote, "Gold has been supported by increased demand from Asian investors, especially in China, where appetite has been sharpened by an underperforming economy and lackluster markets. Heightened geopolitical risks amid conflicts in Ukraine and the Middle East has also boosted haven buying," end quote. It's no surprise then that gold prices are reaching historic highs, making previously unattractive gold extraction operations now highly lucrative. This has created great opportunities for savvy investors seeking to take advantage of these trends. And today's video sponsor, Ruhr Gold Corp, is offering potential investors such an opportunity. Ruhr Gold is a minerals company at the forefront of the mining industry, specializing in gold exploration and discovery, with prime locations in established gold rush regions of New Zealand. 6 factors make Ruhr Gold Corp stand out. 1. High-grade gold targets. The land owned by Ruhr is in areas with proven samples many times the global average, showing amazing potential. 2. Location. New Zealand is an ideal mining address with highly prospective geology and a rich gold production history. The country has a low sovereign risk and a new conservative government focused on economic growth and job creation, which means the opening up of mining, making it once again a very attractive destination for mining investment. 3. History. New Zealand has a long history of high-grade gold discoveries. 4. World-class team. The chairman is Oliver Lennox King, former chairman of Frontier Gold and Rox Gold, both gold mining giants, and he is the largest shareholder of Ruhr Gold. Before becoming the CEO of Ruhr Gold, Robert Eckford co-founded Eris Mining, another gold producer. He gave up $500,000 annual salary to earn a third of that with Ruhr Gold because he is betting that his equity holdings with the company will make him a fortune. 5. Technology. Historical mines were limited by the technology of the time. Now there is major potential to expand. 6. Timing. Permits and tidal work are secured and the company is ready to start drilling. In this bull market, gold stocks are in the best position to move dramatically higher. Gold extraction firms are surging in value and where the opportunities are. Ruhr Gold provides an excellent opportunity to ride this trend and as such is very much worth looking into. Ruhr Gold currently has a market cap of only $25 million, but if its strategy proves successful, in 2 years the company will have 4 gold mining shafts in operation, resulting in a surging new market cap. This is a speculative opportunity, some risk, but also space for high returns, and as such could make an excellent addition to a well-diversified portfolio. We remember that all investment involves risk. This is not individual investment advice. Always speak to an investment professional before making any investment decision. A big thank you to Rua Gold for sponsoring this episode of China Update. Okay, we now move back into regular coverage. We remember on Friday, Beijing made a big announcement about housing support, the strongest yet since the housing crisis started over 3 years ago. On Saturday, we did a deep dive into the specifics of the policies. See that video if you're interested in those details. For today, I thought it would be useful to examine some of the most notable reactions from within China and internationally to these measures. Of course, domestic state media outlets have tried to strike a positive tone. The state-run Securities Daily said in a front-page editorial on Monday that the new plan will help developers reduce inventory backlogs, generate cash flows, and improve their financial standing. But it also warned of financial risks and the need to stave off any spike in non-performing loans. More independent analysis, however, has been far less optimistic. One of the big themes is that the support is a good signal, a good start, but it is likely not going to go far enough. Analysts said the central government's decision to step in as a buyer marked an important step, but noted that the size of financing on offer pales in comparison to the estimated trillions of yuan worth of housing inventory across the country. Larry Hu, chief China economist at Macquarie Group, expressed on Sunday, quote, "Given its limited size and the various challenges in execution, it alone is unlikely to solve the problem. But it's encouraging that policymakers are moving in this direction after failures in the previous years." End quote. Bloomberg economists Chang Shu, David Chu, and Eric Zhu similarly expressed in a note yesterday, quote, "Assuming the purchases were made at a 30% discount to market prices, this would allow the government to buy close to 2% of the new homes for sale or in the construction pipeline. An intervention of this size is not big enough by itself to make a dent in housing supply, but could help lift confidence and stabilize the market. Implementation will not be easy. Fiscal resources are limited, and misallocated objectives between the central and local governments could also get in the way." End quote. Zhu Ning, a professor of finance with Shanghai Advanced Institute of Finance, in an interview with US-based Bloomberg TV on Monday, discussing the Friday policy announcement, said, quote, "This is a little bit similar to the bailing out of financial institutions going through the great financial crisis. But in the end, unless the central government is stepping in and extends its own credit to the real estate market, it's a little difficult or too premature for us to believe we're out of the woods." End quote. The political priority of reviving the housing is also causing some local governments and actors to engage in rather dangerous behavior. In a long piece published yesterday called "Regulators Turn Blind Eye to Ban Zero Down Payment Property Deals," Chinese financial media outlet Caixin reports, quote, "Disguised zero-down payments, which are officially banned in China, have become a growing trend in some cities, as developers of new homes and owners of pre-owned homes are desperate to sell in a sluggish market. Experts warn that such practices will distort home price statistics and increase risk for mortgage lenders." End quote. Meanwhile, over the weekend, we learned that prices for new homes in first-tier cities fell 0.6% from March to cap an 11th straight month of decline. In the secondary market, home prices weakened 0.9%, 12th month of decline. We also saw that year-on-year, both first and second-hand home markets saw their biggest drops on record. And perhaps most painfully, revenue from government land sales during the January through April period fell 10.4% year-on-year, faster than the 6.7% slump in the first 3 months of the year. One analyst bluntly warned that if last Friday's measures failed to revive the housing market, it would signal that Beijing is losing control of its ability to stimulate and support its crisis-ridden economy. Okay, that is today's episode of China Update. Thank you so much, everybody, for watching. Have a great Tuesday, and I will see you all tomorrow.